Nobody tells you about this part. You spend months searching for the right home. You negotiate the price. You get approved for the mortgage. You feel ready. Then a document lands in your inbox called the closing disclosure. And suddenly there is a bill for $15,000 due in 3 days that nobody warned you about. That is closing costs. And today we are breaking down every single fee so nothing catches you off guard. What are closing costs? Closing costs are the fees required to finalize your home purchase. They are completely separate from your down payment. They are due on the day you sign, and they typically run between 2 and 5% of your loan amount. On a $400,000 home, that is anywhere from $8,000 to $20,000, due on a single day. Every line item on that bill exists for a reason. Here is exactly what you are paying for. The lender fees. These go directly to your mortgage lender for processing and funding your loan. First is the origination fee. This is what the lender charges for creating your loan. It usually runs between 0.5 and 1% of the loan amount. On a $400,000 mortgage, that is up to $4,000. Then there is the underwriting fee. This covers the cost of reviewing your financial profile and approving your application. Expect somewhere between $400 and $900 depending on your lender. Some lenders also charge an application fee just for processing your paperwork. Between $200 and $500, non-refundable even if you are denied. The third-party fees. These go to outside companies that are required to complete the transaction. The appraisal fee. Before your lender gives you money, they need to confirm the home is worth what you are paying. A licensed appraiser comes in, evaluates the property, and charges between $300 and $600 for that assessment. The title search fee. A title company researches the entire ownership history of the property. They are making sure there are no hidden liens, legal disputes, or ownership claims buried in the records. That runs between $200 and $400. Then there is title insurance. This protects you and your lender if a problem with the title surfaces after closing. Your lender will require their own policy. An owner's policy for your protection is optional, but do not skip it. Together, they can cost between $1,000 and $2,000. Depending on your state, you may also pay an attorney fee. Some states legally require a real estate attorney at closing. Budget between $500 and $1,500 if yours is one of them. The prepaid costs. This is where people get really confused because these are not fees for services. They are money collected up front to fund accounts and cover immediate expenses. Your lender will require you to pay the first full year of homeowners insurance at closing. Depending on your location and coverage, that is typically between $1,000 and $2,000 due that day. You will also prepay interest from your closing date to the end of that month. Close on the first of the month and you pay almost nothing. Close on the 15th and you pay 2 weeks of interest on the spot. Then there is escrow setup. Your lender opens an account to collect monthly contributions toward your taxes and insurance. They require 2 to 3 months of reserves deposited up front just to get it started. Government fees. Recording fees go to your local government for officially documenting your ownership in public records, usually between $100 and $250. Transfer taxes vary by state and can be significant. In high-tax states like New York or Maryland, this number gets uncomfortable fast. If you want the complete step-by-step process of buying a house from offer to keys in hand, I found a course on Udemy that walks you through everything in detail. It is one of the most straightforward guides I have come across for first-time buyers. There is a 50% off coupon code waiting for you in the description box below. What you can actually negotiate. Here is what most buyers never realize. Not everything on that disclosure is fixed. You can shop around for your own title company and settlement agent. You can ask the seller to cover a portion of closing costs as part of your offer. You can compare loan estimates from multiple lenders because fees vary more than anyone tells you. Closing costs are not designed to catch you off guard, but they will if you let them. Now you know every line on that bill before you ever sit down at that table, and that changes everything.